Welcome to episode number 3 of Michael on the Mic. Today we have a lot of stories to cover from the stock market. Is it crashing, or are we just seeing a correction? Are we going to see a bull run again soon? To Coinbase's IPO, they recently filed their paperwork, officially are going to be IPOing very soon in 2021. We're also going to go over Robinhood. They're in talks to IPO as well. After that, we're going to talk about a couple of stocks that have been on fire lately, from Lucid Motors and Churchill Capital, which recently announced their merger, to Lion Electric, which just secured a massive electric bus deal with the city of Los Angeles. And we're going to go over a number of other stocks as well. After that, we're going to cover some tech news from Amazon, launching Amazon Music on Google TV and Android TV, to other stories about Paramount Plus launching their streaming service as well. So make sure to stick around until the end of the video. Please be sure to like the video down below. Let me know which story is your favorite, which stock or story you guys like the best in today's episode. And if you stick around to the end, we're going to do a special game at the end of the video. So make sure to stick around until the end so you know exactly what we're going to do. But anyways, let's start off with the stock market. Is it crashing? What is going on there? So over the last couple of days, the stock market is down around 6%. At all-time highs on February 12th, the stock market was at $14,095.45. Now it is all the way down to $13,119.43. Many analysts are saying this is just a regular correction. I think this is just a normal correction. If you look at the last 6 months of the stock market, for at least the NASDAQ, we're up about 12.5% in the last 6 months. In the last year, it is up 46%. So really, this is just a normal correction in the stock market. I don't think there's anything to worry about, but if you guys are invested in volatile stocks, you're going to see a lot more movement now. You may be down, 20% versus the NASDAQ or the S&P 500, which is down between 5 and 7%. But really what I do is I just use these days to just buy more of the stocks I own. So if I see a stock that I like, that I own, that's down significantly, well, then I usually add more to those stocks because it's a great time to add, especially if you're a long-term investor. So really nothing to worry about long-term. If you're invested in the stock market for long-term results, you could just add on these sorts of days, add when the market is going down. But anyways, enough of that. Let's talk about Coinbase, because Coinbase, they've been doing really well lately, and they just filed for a direct listing, a direct IPO, after revenue more than doubled in 2020. So Coinbase, they announced just the other day that they're going to be going public, and they revealed that its revenue doubled in 2020. According to their filing, they said that they had revenue of about $1.2 billion in 2020, which was up from $483 million the previous year. So they more than doubled. And the company also reported net income of $322 million for the year after posting a loss in 2019. And really, this is mainly driven by the exception, a lot of people accepting Bitcoin now, and a lot of people talking about Bitcoin, Ethereum, and cryptocurrency in general. So according to their filing, they said that the risks of their platform right now is that their net revenue is substantially dependent on the prices of crypto assets and volume of transactions conducted on their platform. So if the price or volume declines, their business operating results and financial condition would also decline. They'd be negatively affected as well. So one of the main reasons they're doing so well right now is because Bitcoin has reached a price of over $50,000 per coin. Ethereum has been doing extremely well in addition to them. And also, we're seeing large companies like Tesla, Square, and a number of other companies starting to purchase large quantities of Bitcoin. And all of that's just going to help Coinbase and their business, because as large companies are buying it, more smaller retail investors want to buy it as well. So currently the company has about 43 million verified users, and they have about 2.8 million making monthly transactions on their platform. So they are a very large platform. You can sort of think of them like a Robinhood, but for cryptocurrency. And Coinbase, what they're doing right now is, we don't know exactly when they're going to be going public when their IPO is going to happen, but all we do know is that it's going to be a direct listing, which essentially means that investors and employees are going to be converting their ownership stakes into stocks that list on the exchange. So we'll have to wait and see what happens. We don't have any specific date yet, but this will be a very interesting IPO in 2021. A lot of people, I think, are going to want to be a part of this because a lot of people like crypto. A lot of people like these, technology companies, especially like a Robinhood or a Coinbase, and I think this is going to do extremely well. So make sure to keep you guys updated on that. But next story, very interesting, is that I read the other day that Lion Electric, stock ticker symbol NGA, they just signed a deal with California's largest school district. This is a stock that we've spoken about a lot on my main channel, and Lion Electric is a leading manufacturer of all-electric, medium, and heavy-duty urban vehicles. They recently announced that they've received an order for their school buses from Los Angeles Unified School District, LAUSD. The initial order is of only 10 Lion C school buses, so it's a pretty small order, but this is significant because LAUSD is possibly the most well-known school district in the U.S. It's the second largest school district, and it serves over 600,000 students in kindergarten through 12th grade at over 1,000 schools. It's a 720 square mile area, includes the city of Los Angeles and 31 municipalities as well in Southern California. So this is by far one of the largest school districts in the U.S. And even though it's only a 10 vehicle order, this is going to open the door for Lion Electric to have a massive order in the next couple of years. They said that they're going to get these vehicles delivered in the spring of 2021, so very soon, and each vehicle is going to have a range of 155 miles on a single charge. And in my opinion, I think if this goes well and the school district likes the buses, likes the products that Lion Electric delivers, this is going to open the door for thousands of vehicles to be ordered from Lion Electric. I think it's going to really help out the stock price. It is a small company, so if they're able to deliver, I think this is going to be extremely big for Lion Electric, stock ticker symbol NGA. Recently to date, they've delivered 300 electric school buses in North America, and with over 6 million miles driven since 2016. So that's how many they've delivered in total. So they're going to get another 10 to the city and the school district in Los Angeles, and this is just going to lead the way for larger, bigger orders, especially with this school district in the future. So definitely a stock you want to keep an eye out on. The market has been down recently, but once everything starts to rebound, I think this stock is definitely going to take off, especially with this new order that they just received, because it's a pretty big partnership. Even though the order is small, it is a very big partnership. Ford top executives said that the U.S. they have to begin building batteries of their own for the coming wave of electric vehicles in order to avoid supply disruptions. He said how it's similar to the semiconductor shortage now shutting American auto factories down. Jim Farley, Ford's chief executive officer, their CEO, said we need to bring large-scale battery production to the U.S. and that Ford is going to be talking to the government about that. He says they can't go through what they're doing with chips right now with Taiwan. It's just too important to transition to electric vehicles, have these batteries, and they can't be reliant on other countries. Right now, Ford is looking to make an electric F-150, and Ford's battery supplier, Ford's upcoming F-150 pickup truck, is SK Innovation Co., which is a company based in South Korea. And recently, they lost an intellectual property case brought by one of their rivals, LG Chem, and also from South Korea. And the International Trade Commission banned SK Innovation from importing batteries to the U.S. for the next 10 years. So that's going to really impact Ford's business. They did allow the company to import components for the next 4 years, but either way you look at it, after 4 years, Ford's going to need to have these batteries, and you can't just rely on companies outside the U.S., especially with foreign relations. It's going to be essential that they get them in the U.S. The CEO of Ford said it's a huge opportunity, a huge multi-solution opportunity for the legacy players in the auto industry to make sure that there's more insourcing, make sure more vertical integrated, and just get more of the production in the US, because this is really important. So speaking of electric vehicles, there's a lot of components in them. One that we've spoken about a lot is the batteries, which we just talked about. But another thing that's really important is there's a magnet on every single electric motor. And all of these are really produced overseas in Asia right now, except for MP Materials, which mines this rare earth magnet that goes on every single electric motor, whether it's in a car or a bus, whatever it is. If it has an electric motor, it needs this magnet on it. MP Materials is the only North American-based company that makes these, that mines this material. And the stock price has been doing extremely well lately. We've been speaking about it since it was less than $25 a share. Now it's over $45 a share. And recently, the CEO of MP Materials was on CNBC. He had an interview, about 2 months ago. So that wasn't so recent. But then just the other day, Jim Cramer also came out and spoke. He said, with all of the market volatility, with the stock market going down, a lot of these SPACs are taking pretty big hits. He said ones that he likes right now, MP Materials is one that he would buy. He said it's high quality, got very good management, and people should be buying this on the pullback. I currently own a couple thousand shares of it, and MP Materials, what is just really important about it is that they're the only North American company that mines this rare earth magnet. No other company in North America does it. All the other material comes from overseas in Asia, and it's going to be important that we have a US-based company that can mine and supply this magnet, especially as EV production ramps up over the next couple of years. It's going to be important that we have a lot of supply in the U.S. Same with batteries, same with this magnet. All of these materials need to be readily available for electric vehicle companies. So it's pretty important that we'll see that in the U.S. And I do really like MP Materials. It's been going up recently, even when the market has been going down. So it's something to keep an eye on if you don't have it on your watch list already. So another stock that has been doing really well is GameStop. So GameStop, it's basically like the GameStop short squeeze 2.0. It was at $44 a share the other day, and in just the matter of a day or two, it rose to over $180 a share one point during the day. People are wondering, why is it surging? Why has it gone up so much recently? And the shares were actually halted during trading hours the other day. But really, what happened is the same thing. Wall Street bets, a lot of people on Wall Street bets rallied behind GameStop again. And initially, a couple months ago, when the short squeeze happened, GameStop had a short interest of over 100%. And that really shouldn't even be possible. But that's how it was targeted in the first place, and that's why it rose up so much. As of January 29th, 2021, the short interest was 40%, which is significantly lower than the 120% it was at. But either way, having a short interest of 40% is enough to cause a short squeeze to happen again. And in my opinion, I think that once the stock market was going down, I think a lot of people rallied behind GameStop. They know it has a massive short interest already. And I think also with the stock market going down, people were looking for those stocks that could 3x or double overnight, and GameStop has done it before. So I think a lot of people put their money in GameStop, causing it to go up. Either way, if you are in it, I'd be extremely careful. I didn't invest in it myself, but it's just too volatile for me. You don't know what's going to happen. Tomorrow, it could be at $200, $300 a share, and the next day it could be at $40 a share. So just be careful if you are investing in it. I wouldn't put money into it that you need. If you need the money, I wouldn't put like your life savings into it. If you do anything, it would be a small portion, but it's just my opinion. That's what I think. But let me know what you think of GameStop, if you guys invested in it, and what's going on with your portfolio in GameStop. Another story is with Churchill Capital. Churchill Capital recently announced their merger with Lucid Motors. After the merger was confirmed, Lucid Motors dropped 50%. They went from $60 a share down to $30 a share, basically overnight. And a lot of people were wondering, why is this happening? What's going to happen next? And really, the main reason why it dropped so much is because the stock price went from $13 a share all the way up to $60 a share in the matter of like 2 months. And the company has not yet produced any vehicles. They're set to have their first vehicles roll off production line in late 2021, but either way you look at it, the company's valued at about $50 billion without ever having gotten a vehicle into the hands of a customer. So right now at $27, $28 a share, I think after the merger was announced, a lot of people took their profits off the table. A lot of people were in it since $13, $14, $15 a share. They doubled or tripled their money. They wanted to secure some profits. And that's why I think we saw the big drop in Churchill Capital and Lucid Motors. But now where it is right now, I think once we see the stock market start to turn around, we see a couple green days, I think we will see CCIV trend upwards. But long term, for me, if you're looking long term, this is still a very risky investment because they haven't even delivered any vehicles yet. And I'm not trying to be negative or be down. It doesn't matter to me. But all I'm saying is, if you're looking at a company that's valued at $50 billion, that's never actually delivered a vehicle to a customer, you don't know what's going to happen. People might not like the vehicles. There could be malfunctions. They could have trouble getting it off the production line. You don't know what's going to happen. So it's very risky long term. But short term, you could see some upside, especially leading up to the merger date. We don't have a confirmed date yet, but it will happen in 2021. So let me know your thoughts on CCIV. Are you going to be invested in it? Me personally, I'm going to stay away from it for now. I did invest in it at one point, and I sold it when it was around $40, $45 a share. But right now, for me, I'd rather stay away from it just because long term, I'm trying to look at stocks long term, and long term CCIV, while it does have a lot of potential, if it is able to accomplish all the goals they have set, in reality, it's going to be about 5 years really before we start seeing them being able to produce tens of thousands or hundreds of thousands of vehicles every single year. So I know it's not about what they can do right now, and it's about what they can do in the future, but either way, they still have not even gotten one single vehicle into the hands of a customer yet. So that's just, a pretty big deal in my opinion, but let me know what you guys think. Next up is with Jobless Claims. So the weekly Jobless Claims dropped sharply this past week, the week of Thursday, February 25th. But the labor market remains still in a very challenging position. So the first time jobless claims fell to 730,000 jobs lost for the week ending February 20th, 2021, according to the Labor Department. This was well below the 845,000 that was estimated and 841,000 from last week. So it's more than 100,000 jobs lower than it was last week. So this week, 730,000 people filed for unemployment benefits, and last week it was 841,000 people. This is a good sign. It's like we're moving in the right direction. More and more jobs are coming back. More things are opening up. The economy's getting better. But either way, still 700,000 jobs in a single week is still a lot. That's, by no means is that a small number, but at least we're seeing a trend in the right direction. We did see it increase last week, so it's good to see it moving down. This should be a good sign for the stock market, good sign for the economy, good sign for jobs opening back up. And I think overall, it's going to really help out with the stock market, with the economy, and especially once we get more stimulus passed, it's going to continue to just build. And I think we're going to see these numbers continue to get better. Now on to Robinhood. So we spoke about earlier about Coinbase, their IPO. And some company that's similar, in my opinion, is Robinhood. Robinhood is like for stocks and investments for beginners. I see Coinbase as very similar, but focused solely on crypto. So Robinhood is still on track for a very hot IPO, despite all of the drama with GameStop. A lot of people didn't like how Robinhood handled the short squeeze with GameStop and AMC when they restricted trading. There's a lot of drama there. But either way, the demand for Robinhood shares in private markets has been surging, and it's likely just because of all this free advertising they received during the massive short squeeze. Robinhood gained 3 million users in January of 2021 alone, and from brand recognition perspective, everyone has heard about Robinhood, especially in the news and everything going on with GameStop recently. So despite there being some positive, some negative news, it doesn't matter. There's been so much free press. They've gotten so many new users, and that has really made it a more valuable company for private investors, and I think it's going to help out their IPO when it does happen. According to a couple of analysts, they say with the amount of capital that Robinhood now has, they expect the company will be a dominant brokerage going forward. And I think that this is true. I think that most retail investors, regular everyday people, really like Robinhood because it is so easy to use. Some people don't like how they responded and reacted to what's going on with what happened with GameStop and AMC. But I personally use Robinhood. I have it as one of my brokerage accounts. So I think it's going to have a lot of demand when it does IPO. We don't know the exact date or like what the price is going to be, but we do know they're currently in talks of going public. It might happen, in late 2021 or early 2022. We don't have any specific dates yet, but it's going to be a very, very hot, very exciting IPO, and I think a lot of people are going to want to get in on that early. Now we're going to move a little bit away from stocks, a couple of tech stories, and one is with Amazon Music, and Amazon Music is now available on Google TV and Android TV. And this is important because Amazon and Google previously, back in 2017 and 2018, they had a lot of feuds, a lot of arguments over content services for their products. So now Amazon Music finally coming to Google is a pretty big move. So Amazon Music, it's not going to be the first, music platform available on Google or Android TV, but it's just going to be similar to, let's say, a Spotify or Google's own offerings, like their own offerings or Tidal. So it's just going to be another option for people to use Amazon Music on, let's say, Android TV or Google TV. The Apple function, very similar to Amazon Music on other devices. Subscribers to Amazon Music Unlimited, it costs $7.99 per month for Prime members, or $9.99 per month if they're not a Prime member. So pretty big news for Amazon having that, it's basically a partnership with Google and Android. Another piece of tech news that I found pretty interesting was Paramount Plus. So Paramount Plus officially will be replacing CBS All Access, and it's going to be costing $10 a month ad-free, and they're going to be launching a $5 tier with ads in June of 2021. If you or anyone you know has CBS All Access or you're subscribed to it, you'll automatically qualify for comparable plan on Paramount Plus. And with the base tier of Paramount Plus, it's going to be $1 cheaper than CBS All Access at the entry-level price, but you'll no longer have the live stream CBS broadcast network. There are a couple other differences as well, but basically it's a very similar service to the CBS All Access and similar pricing, but the Paramount Plus premium tier will include everything. So it will be basically the same, just a different name. This is going to compete with companies like Disney Plus, HBO Max, Peacock, Apple TV Plus, Discovery Plus, all these other companies that have launched streaming services recently. They're all trying to get a bit of that market share, trying to take on Netflix. And Netflix doesn't do streaming, but they're all trying to. Netflix doesn't do like live TV shows. They do more, they do a lot of exclusive content themselves. They do license a lot of content, but these companies are trying to enter the mobile and streaming space, and they're all trying to get a bit of that market share. Interesting to see how that plays out, which one comes out on top. But right now, there are so many different ones. Let me know which ones you guys use. Me personally, I have Hulu, I have Netflix, and I think that's it. Yeah, I just have those two. I don't have YouTube TV or HBO Max or Peacock. But let me know which ones you guys have, because there are a lot of them. Moving on, another thing I read, which is pretty interesting, is that now you could buy 3D printed homes. And it's from a company called SQ4D, which is a New York-based company, has barely a dozen employees. And while they aren't the first company to make 3D homes or 3D printed small structures, they are being used. They are the first company using the technology specifically for the for sale market. So you can buy a home that has been 3D printed, and they said they started off by making small desktop 3D printers and came up with the idea that they need to disrupt the housing market and the construction industry. I think this is a great idea. It's going to be cheaper. It's going to be cheaper over time for them to be able to use this. And you can see in this picture, they just use concrete for the walls, and they could basically use any material they want, but it's a very solid house, very solid. And I'll link the video down below so you can see it. But they're saying with this technology, they're trying to build homes and houses in half the time for half the price. They don't have to worry about, paying workers as much. They said their profits will be higher. They'll be able to show, they'll be able to have be able to make more profits just because they don't have to hire as many people to work on it. They have to have their 3D printers to actually do it, but they could just set that up, leave it overnight, and it could just go continuously until the house has been printed and built. So it'll be pretty interesting to see how that plays out. I think as we see 3D printing get more and more advanced, especially with using different materials, making it cheaper, I think we're going to see more and more houses and even maybe apartment complexes down the road be 3D printed, because it is just so much easier if you could just program a computer to 3D print an entire building and just set it up, leave it there, for a couple of days in a row, however long it takes, and you don't need really much supervision at all. The machine can just automatically build everything once it's programmed. So it'll be interesting to see how that plays out. But the company is called SQ4D. It's not a publicly traded company. Pretty small, but I think we will see this continue to grow in the next couple of years. So the largest crypto exchange in Southeast Asia, Philippines-based PDAX, experienced a technical failure that led to Bitcoin trading at $6,000 per coin, which was an 88% discount to the current price. And following this incident, PDAX asked its customers to return their Bitcoins, and they threatened legal action. According to the exchange's CEO, the system error was not due to a hack. It wasn't, but it was a technical glitch caused by massive surge in trading activity. So basically, as the price of Bitcoin has been skyrocketing, more and more people have been looking to get in, and that's what caused this. The initial outages were on February 18th, and people didn't want to give them back. They said, we bought the Bitcoin on the platform, and it wasn't, they did nothing wrong. They purchased it on the platform. They got it for that price. They shouldn't have to return it. So according to a report, it says, after almost 24 hours, they sent me a letter and a SMS message requesting me to transfer back the BTC, or they may be compelled to take legal actions against me. That was according to one trader. They also said that people were locked out of their accounts if they didn't return it. And there's been a lot of drama here. A lot of users were upset about this because they said they didn't do anything wrong. They just bought Bitcoin on the platform. And since they bought it, Bitcoin has gone up either way. So either way, they would lose money. The platform's upset because they said it was a glitch. But really, What do you guys think should happen? In my opinion, if it's the platform and their platform glitched, that's no one's problem, no one's fault but their own. That's what I think. They should be able to handle the volume, or if it reaches a certain threshold, there's too many people, they could like restrict trading. That would be better, at least, than selling people at an 88% discount. But either way, people who bought it didn't do anything wrong, in my opinion. But let me know what you guys think about this. This is a really interesting story. I don't know how it's going to be resolved or what's going to happen there, but many users are locked out of their accounts. They can't access their Bitcoin, and the company is threatening legal action on people who did get the Bitcoin. So let me know what you guys think about that. Moving on, we're going to talk about another stock, which is BFT. They're merging with a company called Paysafe. Over the last couple days, the stock price has dropped pretty significantly, and I think it's a great time to get in. I own I own 8,000 shares of BFT, and why I like this so much is right now they handle the gaming dollar volume. They're a payment processor for very popular online games like Fortnite, Twitch, DraftKings, Bet365, William Hill, and Betfair. So they handle online games and online gaming revenue payments as well. And the way they make money is for the total volume dollar amount that's spent on their platform. They take a certain percentage. They take 1.56% of the total dollar volume that runs through their platform. They're a very profitable business. They expect to make 30.4% margin this year, and by 2023 they expect to have a 40% margin. And in my opinion, at the current price, it's dropped pretty significantly over the last couple of days. I wanted to let you guys know about this because I have been buying more of it. And if you think that the gaming industry, like let's say online gambling with DraftKings, if you think more states are going to approve online sports betting, well, this company is behind processing all those payments. If you think online gaming like Fortnite and Twitch are going to grow as well, this company's also behind those. So if you combine online gaming and sports betting, both of them are growing, and Paysafe processes the payments for both of those. And they're a very profitable business. Their valuation isn't too high right now, considering their revenue and their numbers right now. So with the current valuation, how much has dropped recently, once we see the market turn back around, I think you're definitely going to want to at least put this on your watch list, if not get into it. But let me know your thoughts on this. Last couple stories. We have, I think, two more. So Twitter shares have been doing extremely well recently, and they skyrocketed after the company announced plan to double their revenue by the end of 2023. The other day I spoke about how Twitter, there were rumors that they were going to be launching like paid subscriptions on their platform, that they would have ways for creators to monetize and make money from their followers. And the reason why Twitter came out and said that they would be able to double their annual revenue is they said that they aim to have 315 million monetizable daily active users by the end of 2023. And this is important because it's the first time Twitter has set long-term goals for revenue and daily users in a while. And doubling revenue means they're going to go from $3.7 billion in 2020 to at least $7.5 billion in 2023. The company also set a goal of doubling its development velocity by the end of that same year, which would essentially require it to double the number of features each employee ships that directly drives revenue. So they're making some pretty big moves, and these features are pretty exciting. And investing in Twitter right now, on days when everything's been down, this stock has been doing extremely well over the last year, 6 months, month. They're continuing to go up, and many analysts now are forecasting it to double because the revenue is going to be doubling. They expect the stock price to do extremely well, reach well over $100 within the next couple of years. But speaking of Twitter and their new features, so the couple of features that they launched, they didn't launch these yet, but what they're talking about and what they teased is New features for groups, tipping, and super follows. Twitter, they're going to be testing several of these new features. We don't have a specific launch date yet. We just know that they are coming at some point. And the three features, so the first one is like communities on Facebook. And it's a group that allows Twitter users to come together based on their interests. According to Twitter, they said they're working to create a product experience that makes it easier for people to form, discover, and participate in conversations that are more targeted to the relevant communities or geographies they are interested in. So it looks basically just like a Facebook group. You could see, or like a Facebook page, hashtag social justice, crazy for cats, plant parents, all these pages where people have common interests all go together. And the company, they also are going to be exploring other features geared more towards creators and influencers and helping them monetize their Twitter following, including two different things, which are tipping, which is the second feature, and super follows. So as you can see in the graphics that they showed, for tipping, it seems like, when you go, let's say, live on YouTube, people can like tip and donate money. It seems like a very similar thing to that. And then the super follows is for like exclusive content. Similar, think of it like a Patreon or a paid, you could pay for pages on Facebook as well. It's very similar to that. As you can see here, it says super follow this creator for $4.99 a month. So all of this is just in talks, but it's going to incentivize creators to post more content on Twitter. It's going to help them monetize their followings, and they're pretty interesting features. It's going to generate Twitter more revenue, help creators generate more money, and really it's a win-win situation for everyone. So let me know what you guys think of this. We don't know when it's going to be launched, but they are pretty exciting new features. Moving on, the second to last story is with Amazon. Amazon is test driving Rivian electric delivery vans in Los Angeles already. So Rivian is not a publicly traded company, but Amazon has already agreed to buy 100,000 Rivian electric vehicles as part of a pledge to achieve net zero carbon emissions by 2040. Rivian has raised about $8 billion since 2019 from investors, and this is pretty big news because 100,000 electric delivery vans is a very large order for Rivian. Unfortunately for us, they're not a publicly traded company. They said they don't have plans in the short term, but you never know. So we'll keep an eye out on on this company, on Rivian, how their partnership and their deal goes with Amazon, and potentially in the future, we may see them go public. We don't know, but this is a very large order. In my opinion, I don't think they're going to be able to handle much more in the short term. They're really going to have to just focus on their Amazon orders, and they're probably not going to have too many more customers in the short term. And lastly, we're going to talk about EVGO, which was awarded a grant by state of Pennsylvania to support 14 new fast chargers. So EVGO is the nation's largest public fast charging network for electric vehicles and is the only platform that is powered by 100% renewable energy. They received this grant to support 14 new fast chargers. Doesn't seem like a lot, and in reality, it's not so many chargers, but, getting this agreement with, and this grant with the state of Pennsylvania could lead to larger and bigger deals in the future. They said as part of this effort, the state has allocated approximately $10 million over a 5-year period to fund a competitive grant program for acquisition, installation, operation, and maintenance of EV fast charging equipment and hydrogen fuel cell vehicle supply equipment. They said that EVGO was chosen for the first and second rounds of the state grant program, which is basically just helping them be a net zero emission state and city and promote green energy in general. But anyways, EVGO, they had recently announced a partnership with Tesla. Now they have this partnership with the state of Pennsylvania. They're continuing to make moves in the right direction, and they are the nation's largest electric vehicle fast charging network. And really, right now, their stock ticker symbol is CLII. So if you aren't invested, you want to check it out. They're a SPAC, and the stock ticker symbol is CLII. But anyways, that's really all I got for you guys today. It was a pretty long episode. We talked a lot about stocks, pretty heavy on the stocks today, not as much on tech news. But if you made it this far in the video, let me know by commenting down below. Today we're going to do what's around me. Let's just do camera. Comment down below a camera emoji, the one with the little flash. If you made it this far in the video, so I know you guys made it. But I hope you guys enjoyed today's episode. Don't forget to get your 4 free stocks, each valued up to $1,600, when you download the Webull investing app using the link down below. I hope you enjoyed, and I'll see you guys in the next episode.